Gold continues to be under pressure as the dollar pushes higher, but our next guest says there may be more downside ahead. And is silver a better trade right now? Joining us now is Peter Hug, Kitco's Global Trading Director. Peter, good to have you back on the show with us.
Nice to be here, Daniela.
So, Pete, let's start by looking at gold, which you say is in no man's land right now. The metal down 0.3% on the day. Where does it go from here, Pete?
I mean, gold, we mentioned last week, potentially had another $20 on the downside. I think gold, when I made that comment, was trading around 52. I'm looking for sizable support at 1230. If it gets that low, the jury's still out. And, this is all premised on the recent hawkish comments from most of the Fed presidents, and we'll see what Yellen says at the end of the week. But they're indicating that June, if not June, which I don't think they'll move in June, but if not June, then July might be on the table. But either way, a quarter point, if they move in June or July, to me would be a non-event. And probably would be the same type of buying opportunity that presented itself in December when the Fed first moved.
Just on that note, Pete, I know for the longest time you were saying that you didn't think the Fed would move in June. So was last week's kind of change in direction a surprise to you?
No, I mean, I think they've been hawkish. I think they want to move. I mean, that's been their mantra. And they've been stymied with events not only domestically, but globally. I mean, they want to try to move that rate up. To the best of their ability, try to get it to 1%, and so that they have some ammunition when the U.S. economy eventually turns down. I think June is still a premature date, given the Brexit vote and some of the issues that are involving Greece right now. July would probably be a more likely date if they are going to move. But it's a two-edged sword. The U.S. administration doesn't want a stronger U.S. dollar, but, higher rates will create a stronger U.S. dollar. So the Fed, unfortunately, again, has got themselves in a corner, and because of the corner that they're in, unless the economic data is extremely bad, they're probably going to go a quarter point, even though it makes no sense. They'll probably go a quarter point, and that's had some benefit to the dollar and created some short-term weakness in the metals.
So on that note, is the U.S. dollar really the only story behind gold's weakness right now? Do you think that this dollar rally is sustainable, or is it really up for the wrong reasons here?
Well, I'm not necessarily a dollar bull. I think there's a currency war going on. I think, the market is starting to build in a quarter point move, whether it be June or July. The market builds that in well in advance of the trigger. And so, I'm not a roaring dollar bull, but, you have a market that, unless there's other news, and there may be other news coming, but right now there is no other news other than the dollar exchange rate. And if the dollar shows any kind of, sideways pattern to stronger pattern, it's just easier to sell your gold position that you've been long, for the past 2 months than it is to enter into a new long position on gold until you have some more fundamental news.
All right. So is silver a better play right now then, Peter?
Again, silver in and of itself, I'm not bullish silver, nor am I bearish silver, but I think from a ratio perspective, silver having gone from 81 to 71 ounces of silver to an ounce of gold is now back over 76 ounces of silver to an ounce of gold. So if I was going to put a trade on from a moderately bullish stance, buying silver, selling gold at this ratio is probably a better risk reward than just going naked on the long side.
Peter, finally, just a key level that you're eyeing for gold right now then.
The 1242-ish range is going to have some minor support. Next after that, 1238. I think major support lines in my mind are around the 1232 range. Possible to get down there. On the upside, all of the levels that were support are now resistance. So we'd be looking first at the 1255 level as resistance, then 1265 being the next significant level. If it gets through there, then we're back up in the 70s, possibly 80s. But 65 on the upside is a significant level that needs to be taken out. And on the downside, I think 1232 holds.
Peter, thanks so much for joining us today.
You're welcome.
And thanks for watching. We'll see you tomorrow.